channel. My name is Apio Nancy from Wafula and Company Advocate. I'm here with my colleague, Council John Bwire. Wafula and Company Advocate is located in Jinja City. We are opposite MOBS. Today we are going to tackle rental income tax. A number of times we have received people making inquiries on rental income, and we felt it wise that we should teach our viewers outside, or we share knowledge to our viewers outside there. So it's going to be a question and answer session. I have here my colleague who will be sharing with your viewers.
I liked that when you said sharing, because when you say teaching, there are people who get scared. Jinja City, one of the new cities in Ghana. And today we are launching our first talk where we'll be interacting with our viewers through different social media platforms. So I heard you talk about the topic, but you did not go into details.
We are talking about rental income tax.
Rental income tax.
Yes.
So now, the statement has two elements. The first element is rental income, and then the other element is the tax that is charged on the rental income. Two in one, but meaning the same thing.
So now explain to my mother in the village, what is rental income in simple English?
I would also bring on board your father in town.
Absolutely. Absolutely.
Rental income is basically income that is collected from the activity of hiring out either land or buildings. So in other words, if you have land that you are hiring out, the money that is paid to you, that is rental income. So if you have structures, you are hiring them out in town, rural areas, wherever, as long as you are earning income.
Now we have understood rental income. We are going to the tax bit. When you talk about rental income tax, how is it calculated?
By the way, when you talk about tax, there are people become very skeptical. One of my friends said, "But why do we pay tax?" I reminded him that governments globally cannot survive without tax. After they have collected tax, this money is consolidated and channeled through the national budget to fund essential services like roads, like education, matters to do health. Whether our government is conforming to that requirement is a discussion for another day. Tax that is charged on such income is applied on the total income of either an individual or an entity. Uganda Revenue Authority basically looks at how much I've collected in a particular period, in a particular year. So assuming you have 10 structures, 10 buildings you are hiring out, so you add the income you have collected from the 10 buildings. If you have one, then URI is going to look at the gross sum,
In the premises, which are the allowed deductions, if I may say?
Over the years, Parliament has amended the Income Tax Act to provide for different methods. I will start with the category of individuals, because the formula that is applied in the computation is different. In respect of individuals, we are allowed what we call threshold, annual threshold, monthly threshold. Each month the income which is not taxed is that which is below 235. So in a year that is 2,820,000. That is tax free. You earn it, you take it home. That's the first allowable deduction. Now, once that is deducted, whatever remains is subjected to 12%. So in a simple summary, assuming your annual collection is 10 million, you are going to get 10 million, you deduct 2.82, that is 2,820,000. So what you remain with is what is subjected to 12%, and then you pay the rest, the tax computed to URA. But if you are an entity like a trust, NGOs, companies, private or otherwise, the formula changes. It changes in such a way that you are supposed to compute expenses incurred in the production of rental income. Now, assuming you have 2 buildings, but at the same time you have your bus, you're earning income from the your company is earning income from the bus, is earning income from the building. You don't consider expenses incurred in running the operations of the bus. You consider expenses incurred in running operations of the buildings. That's why the language is such that the deductions is in respect of expenses incurred in the production of rental income. Now, the expenses should not go beyond 50% of the income collected. Why? Because at the end of the day, URA will not tax anything. They used to previously, the law would allow all expenses, regardless of the percentage. So there are some very good schemas. Assume, I give you example. You earn 10 million, but you reflect the expenses to be 9.9 million, meaning what is left for taxation is 100,000. So government amended the law and said, yes, we will agree with the expenses, but it should not go beyond 50% of the income. So if it is 10 million, the expenses should not go beyond 5, so that the government is left with some income to tax. Okay? But the other issue which the viewer should consider and note, expenses you claim to have incurred are verified by URA to test the accuracy of your accounting records. So don't just throw numbers here and there. It's advisable when you are going to make purchases, get receipts. You purchase from verifiable suppliers so that it is easier. If URA is doing an audit, they will be able to ascertain that actually are trading in good faith.
I like the statement you made that over the years. I don't know whether the same also was applied to rental income over the years.
Rental income respect of individuals?
Yes.
Now for individuals it was a different formula. They would allow, they would deduct 20% to cater for expenses. If you have 10 million as income, they would deduct 2 million of the 10, and then again subject it to another percentage to arrive at your tax. So the government decided to do away with the expense, but reduced the charge, because initially the charge was 20, now the charge dropped to 12%.
Now if you are to compare, who pays a bit lower tax if you compare?
But it also depends on the extent of the revenue generated. For proper computation, you need to do the two formulas. But I have ever done the two formulas and determined that actually individuals pay lower tax compared to entities. Why? Because I think government wants to safeguard the individuals so that at the end of the day, they are left with income for survival. Because this 12% is low. Remember, for artificial entities, their charge is 30%. So after you have deducted expenses from what you have earned as a company, what remains, government charges 30%. Assuming your expenses out of 10 million was 3 million, you are left with 7 million. So they will subject 30% to 7 million. But they are an individual, they will deduct 2.82. That's 2,820,000. And subject to 12, which is a very small percentage. So it is really economical. We are now helping here. You know, we have economics as a subject, isn't it? And then we have accounts where they teach accountants to save, to reduce on the cost, so that the company is more profitable, so that an individual making profit. So if you want to make more profit, earn more money, go individual.
Thank you so much.
You're welcome.
Our viewers, that was all. I hope you have benefited something from it.
Maybe just to assure them, we will have this series on quite a number of topics. So feel free to express your opinion. You can give us a comment. You can make suggestions about the kinds of topics you wish us to discuss. But it's important to pay tax. If you cannot hire a tax consultant, I advise you to download income tax. Actually, even you can buy the amended income tax from. You can go to LDC Library. You can go to Makerere Law School. You can go to Uganda Library and other stores, so that you are in the know, because it's important to have these facts within your means to survive.
And you can also find us on Facebook. Our Facebook page, Wafula and Company Advocates. If you have any question that you have not understood or you feel it needs more clarification, thank you so much.